Some say, including Stephen, these physical infrastructure crises are metaphors for China's uneasy growth spurt into the world's second largest economy. There are numerous investors who openly question its standing as such. Famed investor Mark Farber is one of them.
The Chinese economy is nowhere growing near what the government is publishing. It's nowhere near 7% and more likely closer to 2%, if any growth at all.
With me now is the author of The Coming Collapse of China, Gordon Chang. Gordon, it's great to have you with me. Thanks for coming in.
Well, thank you.
Do you agree, first and foremost, this is economically speaking, with Mark Farber saying that the Chinese economy is growing at 0 to 2% versus the 7% that was being telegraphed?
Well, in Beijing, they're privately saying 2.2%. But when you look at things like construction starts for the first half, down 15.8%, trade down 6.9%, all the rest of this, there's so many figures that just are inconsistent with 7.0% growth. They're either at zero or they're going to be there very soon, especially we saw some pretty bad numbers out in July, and the first half numbers, especially the quarterly results, weren't very good. Alibaba, Lenovo, really disappointing investors. That's an indication of how bad things are in China.
So how bad things are, you were sitting right beside me here. I know you were following these stories anyway. Those two accidents, which were about 1,100 miles apart, those two different cities. I mean, what about the social media, the control that the Chinese government is trying to exercise? We talked about Weibo. And I mean, a lot of those videos that were posted were then taken down and people probably putting themselves at risk by posting them.
Yeah, but the only reason why we knew about this as quickly as fast with the Tianjin explosion was because of social media. Those postings were taken down, and people in Tianjin were really upset because they were saying that on American, British, Italian TV, that was headlining the news. But in Tianjin itself, they were watching South Korean operas, and they were then saying that their leaders had really lost humanity. And I think that is a theme we're going to see, especially because this isn't going to go away even after they put the fires out because of the pollution, which is now in the water and in the Bohai Sea.
Gordon, bigger picture, we see these struggles as China wants to, like every government, keep control more or less on what's happening, and we'll call it on the mainland, but yet it's harder and harder to do that, whether it's social media and you have interaction from all over the world, or whether it's capital markets, where you have foreign investors, you're courting foreign investors. How do you see the current Chinese regime really working out this desire to have control, but also be connected to the outside world?
It's really difficult. And the place where it is the most difficult for China is trying to preserve for its local enterprises, its market, but then having foreigners come in with money and expertise. And foreign companies have really done very well, but these predatory and very sort of discriminatory prosecutions of foreign multinationals we've been seeing for the last 2 years is basically Beijing's solution. The other place that has a real problem is the currency.
It's not really a solution, right? Because then no one wants to go back. But the currency,
the currency is a real problem because with renminbi, they want to internationalize it, but they do need to maintain control. Now you have essentially two renminbis in the world, the onshore and the offshore, and they've diverged quite a lot, especially this week, because Beijing has been fooling around with the onshore currency. That leaves so many opportunities for arbitrage and so many different ways that Chinese people themselves can really play this against their government.
Gordon, quickly, there are also people who say, honestly, what they're doing with the yuan and renminbi is not that different than what the Fed does, what the Bank of Japan does, or the ECB does.
It's very different because really what we're doing is money supply, and that has an effect, of course, on value of currency. What China is doing is directly intervening. They are setting the price when they fix their reference midpoint each day, and also because of their trading ban, they're the ones who actually determine what the value of the renminbi to a very small amount. And so, that is very different from the way that the other countries sort of manage their own monetary supply.
All right, Gordon, I'm glad you made that distinction for us. Thank you very much. Gordon Chang joining us there. He is the author of The Coming Collapse of China.